Good morning, folks. Have you ever wondered how much we use Fibonacci's in framing, for example, photographs and video? I'm going to try and show you this picture by taking a still of this angle, this view that I've got of the beach down here in Summer Strand in Port Elizabeth, and how we sort of automatically use Fibonacci ratios in photography and art and in architecture and so on. And part of the reason why it works on charts, I think, is because we sort of frame our charts and psychologically trade according to the way we see things in real life. Now, it's not just art and architecture and photography and so on, but you also see it in the waves and frequency of wave patterns, not only wave shape and size, but also the frequency of the waves approaching the shore. And we see it in plants, in leaves, in stars, in everything that we look at, and that's the Fibonacci ratio. But we sort of automatically apply it when we take photographs, and you'll see the golden ratios here. I'm going to try and make a still shot of this and frame it as one would normally do as a photographer perhaps, and then just draw the Fib ratios into here, the golden numbers and the swirls and the twirls and the levels and the angles and the ratios, and show you what it looks like and why we see it so easily on charts, and why I think human psychology, which is after all what drives the markets, why we apply this to markets and why markets react to these levels. It's not because they're magical, it's because we see them all around us and we automatically respond and react to those levels when we're trading, and accordingly the markets do the same thing. Let's go back to my office and I'll freeze one of these frames and put these ratios on my chart so that you can see what I'm talking about. And that's the Fibonacci number, the golden ratio, and it's something of beauty. So that was quite a dramatic intro, but I thought it was kind of cool and interesting. Fibonacci numbers have been around for a very long time, and any Google search will help you to find out more or less what they're about. I've gone into Wikipedia, for example, and this is all about the Fibonacci sequence and how this number is calculated and how these ratios are calculated. I'm not going to go into the details of it right now, but you can read about it on this Wikipedia page. They've been around for an awfully long time. What these numbers do is they create shapes and ratios between numbers which appear all over the show. And as I said earlier in the intro, they appear in nature, in various forms of nature. And we also mimic them as humans in everything that we do, in the way we design our houses, our cars, in the way we look even. And that's not part of our design, but perhaps a different sort of designer, if you believe in that sort of thing. But all around us, we see it, and in everything that we do, we create the same ratios, known as the golden ratio or the golden ratios. So this has appeared in Sanskrit literature, Indian mathematics, going back a very, very long time. In fact, going back to, as it says here, Bengali, 450 to 200 BC, called the law of two, or the two are mixed in the formula, the Mizrao Cha. But more interestingly, perhaps for sort of Western scholars, and that sounds a bit Eurocentric, probably is, the Fibonacci sequence first appears in the book Liber Abaci, the book of calculation, in 1202 by a man called Fibonacci. Leonardo Fibonacci was his name. Fibonacci considers the growth of an idealized, biologically unrealistic rabbit population, looking at rabbits, assuming that newly born breeding pairs put in a field, each breeding pair mates at the age of 1 month. But we see it in all sorts of things, and there are some mathematical calculations to put it more succinctly for those who understand mathematics. The golden ratio is very clearly and explicitly expressed in mathematical formulae, known as Benet's formula, and you can read all about that here. But the end result of it all, and it's quite a lot of mathematics here, the end result of it all is we get these numbers in the most simplistic form, which kind of govern the way things look around us and the way we perceive things and the way we design and build things ourselves. And the same applies to the way we look at trading charts and markets. and the way we react to the shape of patterns on trading charts. And because we sort of all trade things together as humans, because there's a group, a collective, a crowd behavior, involvement in markets, the Fibonacci numbers play a very important role, in my opinion, in the way the markets look, the way the markets react, the way charts are shaped, and the way we trade them. And it not only applies to numerical levels on the charts, but Fibonacci can also be applied to things like Gann and Elliott waves, and which is not something I particularly involve myself with it, and also in time sequences, which is another interesting consideration to be borne in mind when trading, and also curved structures on charts. So having said all of that, and please, if you don't know about it, you can go and read about it on Wikipedia. There are also a couple of good trading books on Fibonacci. I think two of them that I kind of like, I haven't looked at them for a while, are by the Fishers, Jens, I think husband and wife actually wrote these books on Fibonacci, but there are loads of books you can get on Amazon and secondhand bookstores on Fibonacci and the use of Fibonacci in trading. So go and get yourself some books, and I'll try and put some recommendations in the notes below here. And if you've got any comments yourself on Fibonacci and the way you like to trade them, please put those in the comments section. And while you're at it, please press the like button and consider subscribing to this channel. I'm going to switch across to the charts quickly and show you what I look at on charts very briefly. And here I've got a euro against the US dollar chart, and I've drawn a Fibonacci expression in here, or a Fibonacci retracement. I just want to show you really how I've just drawn this in at random actually for this video. I've drawn it from this high down to this low. This truly was at random because I did it super quick for the video to try and get the footage for earlier in the video, so I didn't even really look at what I was doing. But you can see how the price reacts to these various Fibonacci numbers. The ones I like to look at, and I'm going to go through it incredibly briefly here, but I will do some videos in the future on Fibonacci trading, Fibonacci numbers, and the levels that I look at and how I go about trading off those levels. But you can see here, these are the levels I've got drawn in: the 78.6%, 61.8, 50, 38.2. There's even the 236 Fibonacci. I don't use that one very often myself, but certainly the 38.2, the 50, the 61.8%, and the 78.6%. And I use them all in different ways, which I'll explain to you in perhaps videos to come a little bit later on. But you can see just by eyeballing this how the price reacts to these Fibonacci levels. And the trick is to know how to trade these off these levels. We want to be trading bounces or reversals or pierces through and a continuation through these patterns. So we'd either be looking at them as continuation levels or resistance or support levels. And there are different ways to use it. But what we're looking for really is price action taking in and about the areas where these Fibonacci levels are. And you can see, as I said, just by eyeballing this chart, that there are Fibonacci levels that come into play. Now I could just randomly move this across. Let's do it. And I'll pick, this is a 4-hour chart on the euro. Let's pick some highs and lows and quickly draw in some fibs, just sort of some obvious highs and lows, and see what we can come up with. So I'm just going to take one from this high here to this low here, and we draw the Fibonacci's from highs to lows or lows to highs. Just going to drag it down from the high to the low, and we can have a look at where these prices reacted. Look at that straight away. You can see every time we approach or get near or trade around about a Fibonacci level, the price tends to react. And that's just a very rough example. I'd have to go into some more specific details. I use Fibonacci's in my trading all the time. I'm just going to draw a couple on this euro US dollar day chart from two of the highs to two of the lows. So let's draw one from this high here down to this low. You always draw the fibs from the highs to the lows, and we try and look for reactions around about the retracement levels. And you can see we've seen reactions around the 38% retracement level. We've seen a reaction here at the 61.8, at the 50%, back here at the 38.2, once again at the 50% Fibonacci level, and so on, until the trend eventually continued in the downwards direction. As soon as the price moves past the points that we drew the fibs from, the highs and the lows, we then have to remove those fibs and draw in new fibs. Or of course we could leave them in for future reference. I'll draw one from this recent high down to this recent low over the last number of days. And you can see how this is beautiful. The price reacted first of all to the 38%, didn't manage to hold beneath there. Then we reacted off the 50% Fibonacci and moved back down to the 38%, bounced back up again to the 50, traded between the 50 and the 38, and eventually we got up to the 61.8%. In fact, we touched it just about to the pip over there, maybe 2 or 3 pips away, and then moved down. So you can see how the price on this Euro day chart has traded beautifully within these Fibonacci levels. So as I said, I'm not going to go into detail about how to use these right now, but I just wanted to express my wonder and interest in Fibonacci's and let you know that I use them in my trading all the time. They're incredibly powerful. And I think the reason is not because they're magical, but because they kind of govern the world and the universe around us. The sort of lens through which we see everything is based on the Fibonacci ratios. What is peculiar is that these very simple number sequences, and please read about it in Wikipedia how it works. It's very, very simple actually, even though the mathematics is a little complicated. The actual way of describing it or laying it out is pretty simple. And the way these simple number formulae and ratios govern a huge amount of what we see around us in nature, in the universe, in the way things work, and subsequently the way we react to patterns and the way we interpret patterns. So the mystery is in the numbers and the universe and the world around us, not in some sort of magical powers that they have on the charts, just that we are so used to looking at those numbers, seeing those ratios, experiencing them, being totally absorbed in them wherever we go and whatever we do, that the mass, the crowds, the people that are trading the markets, and that's what a market is, a group of people, a large number of people in our case, looking at the same things, making the same decisions and deciding to whether buy or sell. Well, I hope you found that useful. Keep an eye out for my future videos on Fibonacci. I'll be going into specific methods of trading using Fibonacci levels and how you can, first of all, identify them, and then how you can go about trading off those levels and improving the profitability of your trading. So once again, keep an eye out for those by subscribing to this channel and give the video a thumbs up so that the algorithms know that you have enjoyed it. Take care, and I'll speak to you soon.